Hello and welcome to another video in this course in which we are going to be talking about basically every single concept that we have spoken about so far, and we're going to put it all together, and we are going to be looking at how to trade, how to use all of those concepts so far, because the course is not finished yet. We're going to be looking at basically a recap and how to use the things that we have just said. We're going to be looking at how to trade in sideways channels, how to trade in uptrends, how to trade in downtrends using the things that we have used so far. So these things that you're seeing on my screen should not look Chinese. This is the exponential moving average of 50, which is why I'm using it on the 2-hour time frame on Bitcoin, for example. We have got the fair value gaps, we have got the order blocks, and we have got the relative strength index oscillator. Okay, having said that, let's look, for example, at sideways channels first. Okay, let's look at this one. I'm on the 1-hour time frame. We're going to be looking at this. This is a good old sideways channel. Okay, let's see. First things first, let me ask you a really quick test, okay, to see if you've been paying attention, see if you have been writing your notes. Let's see if you're able to answer this. What do we not and what do we use in sideways channels? Pause the video and then you tell me, and then see if you don't tell me, but you say it to yourself, see if you get it right or wrong. I'm going to give you the answers because I'm very nice. Order blocks, one thing that we use. Liquidity, another thing that we use. Support and resistance, and then the relative strength index. Those are the things that we do use in sideways channels. What are the things that we don't use? Well, basically everything else. Fibonacci, we don't use exponential moving averages, we don't use the fair value gaps. Those are the things that we don't use in a sideways channel. So, having said that, I'm not going to delete these because you should hopefully know by now. And if you don't know what all of those concepts are, then it means that you're skipping lessons and you need to go back and review all of those other lessons. So, having said that, how do I know, first off, that I'm going into a sideways channel? What am I coming from? Coming from an uptrend. How do I know that it's an uptrend? Because I'm going up, I've got a high, I've got a low, I've got a higher high, I've got a higher low. Fine, perfect. This is point 1, this is point 2. I'm now attempting to make another high. I fail. I failed at making a higher high. I have failed at making a lower low. So it's not that I've changed trend and now I'm trading down. It's that I've literally just failed to go up. So it means that I'm on a sideways channel. Another way that you can know if you are in a sideways channel, which I've mentioned, is when you see the exponential moving average getting disrespected like this. What is this about? That's when, this is going to come with a bit more of experience, where you're going to be able to spot it just without this. But if you're starting off, I would recommend, you're probably not going to catch on just here. You might even catch on here, where the price has been staying sideways, and that's when you get your confirmations. You need to start somewhere, okay? It is fine for you to go slower. I'm going at a faster pace because I have spent a lot more time doing this than you have, okay? But at some point you will be on the same level, and I hope even better than me, okay? So I've identified I'm in a sideways trend. Great. What am I going to do now? Is this trend line useful for me? Is this exponential moving average useful? No, I'm going to turn it off. Okay, by turning this off, I'm also turning off the fair value gaps, because they're going to be of basically no use of me in the usage of this sideways channel. Okay, I'm going to replay, and I'm going to maybe stop it around here. Let's see. Okay, so I've just created my new high, which is this one here. This is going to be the top side of my channel, which is also another reason why I said that order blocks are quite useful, because they is basically said where the top of this channel is and where the bottom of this channel is. As simple as that. Okay, where's the bottom of my channel? Could I use the wick, the bottom of this wick? I guess I could, yes. Now that's an important thing, okay? Do I, like when you're drawing out things, when you're using points of reference, do you use the body, like the actual thicker bit, or the skinny bit? So the body or the wick? I personally use the body of candles. I feel like that's where the price has closed. The wick could just be where the price went for a split second, and there's a record of that, which is why the price went all the way down here. But I recommend, if you do still use wicks, fine. There are some people that trade that, you know, instead of matching from body to body, they'll match from wick to wick. We've each got our own trading style. This is not right or wrong. It's just what I use. I recommend whatever you do decide to use, be consistent with it. Don't match up the body with a wick and then back to a body, back to a wick, and then back to, no, you know, if you're matching up bodies, you go from body to body to body to body, not from wick to body to, okay? You get the point. Having said that, because I use the bodies of candles, I'm gonna trace it around here and I'm going to expand it towards the right. This is a very similar thing as the Fibonacci. I like to use the rectangles because it gives me an area instead of a straight line, because I'm weird like that. That's what I like to do. Okay, if you're not happy, if you want to do something else, that's not my problem. Right here I can also even expand it a bit towards the left. I can see that previously that's where the price, that's what I like to say, the price came and it anchored it down. It told you this is where it's gonna be, came down, it tested it again and again and again and again. Okay, so how do you trade in a sideways channel? Simple. From top side to bottom, from bottom to top, from top to bottom, from bottom to top. That's it. What are you going to use to help you? You're going to use the order blocks, the liquidities, and all of that stuff. You can see here, for example, which is going to be quite common, I would say, when it comes to channels. You're going to get like a mini channel within it. You can see that there was this smaller channel rather than this bigger one. Okay, so this is going to happen quite often, where you are going to be able to spot these mini channels. If you are trading and you are buying here, you don't always need to be so eager and greedy to get all the way the massive move. You can just be, okay, I've just made it to the halfway point, which is where all of the other supports and resistances are. Fine. Okay, you need to remember this is a sideways channel, so supports and resistances are going to be really key. Between this support and resistance, between this one and this one, there's this one in between. Okay, so you know, maybe, which we will look at in, I think, the next video, for your stop loss and take profit. Maybe take profit 1 should be here, and then take profit 2 should be on the top. Okay, we will find out more about that in the next video. But having said that, okay, that's basically essentially how you trade it. Another important thing is liquidity. Why? Let me just show you a really quick example. We've come here, we've created some liquidity here on the short term. The price went down below the recent low, which is this one, and then it has gone back up. We've gone straight back down, created some more liquidity here, fine. We've had another test back. Liquidity's been created here from the short term, from people that said, okay, this is the support, I'm now gonna go long, fine. The price went down just below the recent low, clearing out this whole liquidity just below the recent low, and we've now got some liquidity here. Price went up, the price went back down, just below the recent low. I don't know if you can see, I don't know if you can appreciate how this low is ever so slightly below the recent low to stop out those people to grab that liquidity. Exactly the same thing, we get the move back up, the next move down is just below the recent low. Can you spot? Okay, this is a pattern that is going to indicate there's a bunch of liquidity. This high, this high, this high are all decreasing highs. That means that there's liquidity here, and liquidity here. okay? That means that you need to pay attention to this, because when you're in this sideways channel, you can't use the EMAs, you can't use gaps, you can't use Fibonacci, you can't use those other things. You need to use what you can use, what you do have, okay? Pay attention to your liquidity. Another thing that is going to be your best friend is going to be the indicator. So the relative strength index is going to give you, if you find a divergence, whether it's if you're using hours, the money flow, or whether you're using simply a normal divergence, okay, where with the price of your asset. Okay, we're now gonna see how they are useful when I press play on this replay. Having said that, okay, another thing that I would like to mention is that I'm teaching you these concepts, okay? They're like not, well, yeah, I mean, they are the basics, okay? So I'm teaching you the basics. Then it's going to be also very dependent on you as a person, okay? Someone who has got, I don't know, someone who works a full-time job and is trying to learn trading to start a new lifestyle because they want to change their life, this, that, the other, fine. They're probably going to trade differently to the person who has already got, I don't know, 100,000 in their bank account. They might not care so much about getting their stop loss hit. Someone who's only got £100 or $100 to trade is going to be a lot more conservative, is going to look for safer trades rather than someone who does not really care if they lose 100 or £1,000. Okay, that's the main thing. It also really comes down to what sort of person you are. If you're doing this as a hobby, if you're doing this for fun, if you're doing this because you think it's curious, if you're doing this in a demo account, which is where you don't use real money, or whether you are using your £100 because you're desperate to change the way that you're living, okay, which is fair enough. So having said that, it also depends on who you are, what kind of trades you take, whether you want to take the really risky ones, which I will just show you in just a second, okay? But we've got an order block here and an order block down here. I know I've got all of this liquidity I've created here, so I know at some point I'm gonna go test out the previous high, the previous highest high, which is where the order block is. I also know how I want order blocks to react. So I'm going to know if I'm looking for a real breakout or not. I also know that there's going to be some liquidity above here. Let's say that way. I also know how to read those candles that show me there has been a liquidity sweep, a liquidity grab, which is the hammer or inverted hammer candle. That's it. Let's press play and see what ends up happening. So we've just gone above the recent low to grab some more liquidity. I'm on the order block and I am on basically the last straw, the final point before if I wanted to get that reaction, okay? And we can see we keep on getting the reaction. Actually worth noting, hold on. We've got an order block here as well, okay? Another thing, hold on, important. You've got divergence. If I'm not wrong, this is why they are quite useful, the divergences on here. The price is doing this low and this low, so a lower low. You've got this move down on the RSI, you've got this move down on the RSI. You've got a bullish divergence, okay? This means that you're on the extreme, you're on one side of the channel, you're not on the top, you're on the bottom. You've just gone to grab this recent liquidity. Look at this wick. This is the liquidation wick. And it looks like you're now expected to have that move up. Okay, I'm not going to delete everything I've just drawn. And then we're going to press play and see what ends up happening. You go up. And right, you're flirting way too much with this order block. Let's put it around here. We know how we want the order blocks to react. We want them to be reaction zones. I know here, this is a bit, I mean, really, okay, if we did want to get technical, if you did want to scalp is really short-term trades, okay? These are good scalping trades using this order block. Then they're not the biggest reactions, I will give you that, but this is not what you want to see when it comes to an order block. This is flirting with the order block until it breaks it eventually. Right, a bit too quick. what have we seen? We've got this top order block still. This one has been completely lost, and we're now pushing up. Right, this is the important bit, okay, because this is where we're going to see something quite important. This is why I also said it really depends on whether you want to use the bodies or the wicks. Either way, you actually got a divergence. The first thing that we can spot, okay, I'm going to press play really quick. Okay, what can we see? This is the recent high. Right, that's not what I wanted to do. Hold on. I wanted to trace a horizontal ray so that you can really appreciate. Okay, this is the recent high. You've just gone above the recent high, and you're like, okay, but the wick was the exact same point. It wasn't. Look, you were that tiny bit off. You've gone above the recent high to grab liquidity. That's how precise you need to be. Okay, now my question to you is, let's say, because I'm using the bodies of the candles, we'll keep it as that. Just gone above the recent high. Fine. What does this wick look like? This wick looks like a liquidation wick where you have gone to grab some liquidity. What is the next wick, which is when we wait for the confirmation? The next candle is also going to be red. Okay, we've just impacted against an order block. Okay, an order block which hasn't been tested before, because remember, I'm just going to give you a quick reminder. This order block, hold on, I think I haven't done what I wanted to do. Right. Speed it up a bit. This order block here was already tested, okay? Had already been tested once. Same as this one. This order block here, it has been tested once, twice, 3, 4, 5 times, okay? So now this top one has never been tested before. So the first test is usually the strongest one. We've tested it as well. Fine. What else do we have? The price is doing higher highs. We've just seen that's a higher high. That's not a straight line, but you do get it. What is the RSI saying? It is higher than this push up. Therefore, what? Lower highs on the RSI, higher highs on the price action. This is looking like it's going down. You've just hit an order block. You've just grabbed some liquidity. You're on the top side of your channel and you've got a bearish divergence. So what? Are you going long or are you going short? There we go. Okay, these are the things that you need to be using. This is what is gonna make you money. Okay, that's basically it. Another thing worth noting is that you're never really going to know whether this is an accumulation or distribution, whether this is going to break up or whether this is going to break down. You don't really know. Why? Because you've got this in the scenario of a re-accumulation or a distribution. The price can be, you're in this distribution phase here or an accumulation phase. You break up and then you start going sideways. Like, okay, this has to break down now, whether I like it or not. But it actually won't. It will actually break back up. This is a redistribution or a reaccumulation. Exactly the same thing here. This could be going sideways. Like, okay, we've gone up before. I'm gonna go back up, but actually they are distributing here, and it's gonna break down. Okay, so you don't know until the price actually breaks, but that's fine. Because when it breaks, there's something that gets created, which is a trend. And we know how to trade trends, do we not? Yes, especially if you've been following along in this course. And if you've been leaving a like, okay, that is what I like the most, when you leave a good old like. Right, let's see how else the price develops. So I'm now testing my previous support levels. I'm now testing another time my order block. Let's see how this behaves. I'm flirting too much with it and then straight off, that's it. We lost it. Okay. One thing worth noting, I've just broken completely my support level. Fine. This is what my, hold on. Hold on, sorry, I'm dying. My support level was this one, okay? What I'm going to do, as soon as I break it, I'm going to extend it a bit more towards the right. Why? because what was once a support I can now turn into a resistance, which is the case now. I'm going to carry on expanding this a bit more towards the right, and we're going to see how this was actually quite useful. I've just seen, okay, this is why it's useful for you to see the whole bigger picture. I've come out of this distribution phase, I've broken it down, and actually high, low, lower high, lower low, lower high, question mark. No, let's see. The price keeps on moving down. Yes, okay, fine. So actually, this trend has just been confirmed. I've just broken this distribution process. I'm going down, okay? So what does that mean? What can I use? I can now start using the exponential moving average, the fair value gaps, and the Fibonacci retracement. Cool, that's really good. That's really fun. Okay, exponential moving average turned on, and I have got the all the blocks, which are also useful. Okay, one thing that I do want to mention to you: do not try to force trades. Don't force your way into the market. Don't be like the retail trader, because I will be disappointed if you see that it's all going red and then you just decide to go short position here. No, don't trade. Wait for the pullback. You need to wait and see for the price, okay, to give you an entry point. The price is going to tell you, the price action, Bitcoin or whatever coin you are trading is going to say, okay, look, you can trade me now. Okay, when you've got massive green or red candles, don't try to go in it. Don't. I mean, you can, okay, you can, which is something that we're going to get to into a different video, which is where we're going to be talking about different time frames and stuff. But for example here, okay, this is risky, but this is why it's also useful to use different time frames. This is another thing that I do want to say. Maybe in the 1 hour time frame, okay, you've just come out of this distribution process, you're going down, you're like, okay, fine. Ideally, you wouldn't trade long because you're trading against a trend. The trend is going down, you can't really trade long, okay? Now, if you look on a different time frame, you might see, okay, hold on, at this price point, there is, I don't know, I'm making it up, there's a daily gap, there's an 8-hour order block, there's an 8-hour support, or maybe, and just maybe, in the 8-hour time frame, this is a bigger sideways channel. So within a bigger picture, you're doing something small, especially exactly the same thing. If I go on the 5-minute time frame, this is a sideways channel where you could have traded, if you wanted to, you could have traded long, short, long, short. You could, because that's why it's important to always keep an eye on different time frames. But that's for a different video that I'm working on now. Okay, so having said that, this is a higher risk trade, but you've got a gap here, which we have just come and nearly killed, but we haven't killed yet. Making lower lows on the price, making on the relative strength index, we've got this low and this low. This is a bullish divergence, as well as on the money flow, which is being told right here. In case you don't believe me, you're like, this guy's lying, let me just show you. I'm gonna turn on, look, okay. So, you know, it is risky to trade it, I do get it, but, you know, as time goes on, as you get more and more experience, you will be able to know. So what are you waiting for now? You're waiting for a pullback up until where? You've got this whole impulsive move down. So what are we going to do? We're trying to find out where the price can go to next. I'm going to trace a Fibonacci from this whole impulsive phase up. And I'm going to be looking, right, I've got these previous supports, I've got this previous high as well, I've got the trend cloud, and I know I've got two levels. I've got the 0.5 and I've got the 0.618. The 0.618 is also sitting on a fair value gap. Let's see what the price does. Okay, the price has gone up, which is once again why it's useful for you to look on different time frames. I'm gonna go through this in a different video. Don't try to do it yourself now. On a different time frame, maybe on a 5 or 10 or 15 minute time frame, you could see this is a high, a low, a higher high, a higher low, a higher high, and then now you could see, okay, in a different time frame, that you were in an uptrend and that you didn't want to lose this level because that was where your recent low was, which is also where your 1 hour exponential moving average is. Okay, so you're using different time frames. That's why it's so important to mix all of these things up. Okay, but that's a bit more advanced. The price has just gone up. You've gone up above, you've grabbed this recent liquidity. You've just hit the 0.618 level. You've hit this fair value gap. Okay, you've hit the fair value Fibonacci. And then also, most importantly, you have also been overbought. Okay, you've done a high, a low, a lower high. You are currently, should be, if you want to carry on being bearish, if you want to carry on being in a downtrend, you should be going below this price point. Okay, I'm going to delete everything because it's very messy. And let's see how this plays out. If we are still in a downtrend or not. Yes, fine. Downtrend has been confirmed because we have just done a high, a low, a higher, a lower low, and a lower high and a lower low. Okay, so this downtrend is still confirmed. Let's see how else the price moves on, and then that's basically about it. Look, it's the exact same scenario. We've got an order block here. This was also where we had previous support levels here. You know, these were previous pivot points, pivot point. And there was also where we had these previous resistances, this previous support. So this was quite an important place. Basically, yeah. Okay, if you go on a different time frame, on a 4 hour time frame, maybe you could see how you could do the exact same thing. This one hour downtrend is probably part of this pullback on a 4 hour or 8 hour time frame, part of this bigger uptrend. Okay, so you can trade this in a smaller time frame and trade this in a bigger time frame. You see what I mean? That's the beauty of different time frames. You were also oversold. You had this right here, you were oversold. You used your relative strength index and you had a gorgeous move up. Okay, let's see how else the price developed, but I think I've just covered basically everything that I wanted to cover. Okay, hold on. Okay, there we go. Right, now it is time for us to look at how we can trade up. How can we trade in an uptrend? We have just seen, I've just given you a really nice and lovely example on how you trade in a sideways channel. I've also shown you how to trade in a down trend. We're now going to be looking at how to trade in an uptrend. Believe it or not, it's basically the exact same thing we've just done, but with longs instead of shorts. I'm going to click the replay again, start a new one. We're going to start from around here. Okay, I've got a low, a high, lower low, cool. This was not above the recent high, so I'm like, okay, we're still in the downtrend. I'm doing a low and oh, didn't go below the recent low. Okay, so my spider senses are gonna start tingling. I'm also seeing how I'm not really, I'm just not doing much. Okay, hold on, that's a really important thing that I do want to mention to you. Okay, let's see. I'm trying to think what the best way for me to say it is. Okay, let's say the price has two ways of doing a correction. The price can go up, have a correction down in price, okay, which is where the price physically goes down. It goes down and then goes back up. Or if we're doing it the other way around, the price is going down, has a correction back up, and then keeps on going down. Okay, that's one of the ways. Another way is by time. So let's say this is going up. We're expecting that price correction, which we're not going to get. The price is actually going to stay in a really stupid thing doing nothing. This is a correction. It's a correction using time. What could happen? Okay, the biggest indicator of this is your relative strength index. Okay, so as we know, when you are oversold, it means that you're ready for a big move up. When you're overbought, it means you're ready for a big move down. Okay, that's the basics of it. Let's say now, for example, okay, in Bitcoin on the 4-hour time frame, I'm overbought. This means that I should be ready for a big move down. Let's say that we've just had a move up. In theory, I should get a move down. Now, if this is really bullish, if Bitcoin is like, I'm not gonna move down, what it could do, it could stay sideways like this. The whole time that this is staying sideways, this oscillator is going to drop and drop and drop and drop. And the price is not going to move from here. This is a signal of strength. Why? Because the oscillator is ready to pump back up, is ready to go, it's got full of energy, and the price hasn't even gone down. So it's already at a high price, it's ready to have another move up. Okay? I hope you sort of get the image, the message that I'm trying to pass on to you, because that's an important concept that I don't think I've covered yet. Right, this is a sideways channel, and here I can maybe potentially start seeing, okay, all right, I haven't respected the exponential moving average, so I'm sideways, fine. This was basically my range. Okay, cool. First alarm sign, I've just gone over this exponential moving average with a lot of strength. Okay, fine, right? This is not giving me anything yet. It's the first sign of strength. Okay, this is the second sign of strength. What is going on? I've broken the exponential moving average with strength. I've had a test back. This is a fair value gap. If you don't believe me, and if you don't have, well, if you don't believe me, then that's not good. But here it is. I'm going to trace it for you so that you can see it. You should also know how to trace these. We've gone basically to the 50%, to the midpoint of this fair value gap, which is also where the smart trend, no, not the smart trend, where the exponential moving average was, and we've been given a move up. Okay, this means that we can now use Fibonacci, we can now use fair value gaps and all of these different things. Okay, let's see how the price carries on behaving. Maybe at this point you haven't entered your trade yet. Okay, why? Because you're waiting for the price to tell you when you can trade it. This up until now has been a confirmation. So up until now you're like, okay, I've just realized we're trading up. Fine, cool. Okay, let's see where my next entry point is going to be. We keep pushing up, and at some point we're going to start reversing down. Okay, this is where it's a bit interesting. I'm going to trace a Fibonacci retracement from this impulsive phase up. So we had this phase up, retracement, this whole phase up from the bottom to the top. Okay, I've identified the key golden level. It is between the 0.5 and the 0.618. Cool. Okay, I've got, so let's see, we can delete this now. I've got the trend cloud coming in here. Okay, that's another solid point. I'm also oversold. Okay, that's another strong point. I'm also in a 4-hour gap, because this is a whole 4-hour gap. Okay, another interesting point. I've just gone nearly towards the recent lows. These were recent lows, resistance, resistance, resistance. This whole area, this whole block. That's another quick tip that I give you for myself. If I see that, this is me using this, if I see that there's resistance, 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 support, 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 I just look from as far left as I can, and I draw it out towards the right. Is usually like an area where it is likely to be used as a support or a resistance. Okay, that's one thing I found that works right for me. This was a previous pivot point. Pivot, 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 pivot. well, they're not really pivots, but they're points where the price had a reaction. So, you know, and I know I'm in an uptrend. So what am I gonna do? Long or short? I'm gonna go long. Is this a good entry point? Let's see. It was a great entry point. It was a really good one. Exactly the same thing. Okay, this carries on. Okay, whoa. Down. Let's see. Exactly the same reading. Where this is where we went long. Great. We kept on moving up. Right here, looks like we were creating some sort of support. Okay, let's look. Price action has number one priority over everything. This point was also where we had this. And this point was also where we had around this. So, I'm going to take this, expand it towards the right a bit. There we go. Okay, now, what else can I use? I can use Fibonacci retracements from this whole impulsive phase up. I am right in between the golden pocket of where? Of recent lows, of where the exponential moving average is. I'm oversold. It's their previous resistance and support points. I'm going to delete everything so it's a bit clearer to see. And this is an order block. So what? Long or short? Which one do I do? You know, long. Okay? That's basically it. That's how you use all of these different things. As you can see, I'm not entering every single trade that I physically see. Like here, we're oversold. I mean, we're overbought. Can I go short? This time it did work out. Okay, but this is why, first off, you need to use different time frames. You don't trade every single unlimited thing that you physically see. You trade when the market tells you you can trade me. Don't try to force things in. You're gonna see the perfect setup. You will know, you will see it. Okay, this is good. If you need to try and convince yourself that you're not forcing this trade, it's probably because you are forcing it. Okay, this, I don't need to convince myself because I'm oversold. I'm on a Fibonacci point. I'm testing previous lows, previous supports. I'm also on an order block and I'm also on an uptrend. That's basically the reasoning behind it. Okay, so having said that, up until this point in the course, this is hopefully what your trading should look like. Obviously, this is, you need to do your practicing, go on your trading view, trade, or look at your order blocks, see if you can draw them out. Same with the exponential moving averages. Practice all of these things that I'm saying, and make sure that you keep on watching this course, because this is not the end. There's still more to learn. Okay, having said that, thank you very much for watching. I hope you enjoyed this video. Make sure to like and subscribe if you already aren't, and if you're watching this course and you're not subscribed, that's very rude. Have a lovely rest of your day and see you on the next video.